focus on lower priced homes. So the FHA cap that we talk about in Cocoa Capital all the time, in Spokane County, it's 420. We're not looking at any houses where our retail sales price is going to exceed like 300,000. There are three areas you need to focus on in this market right now. Number one is investors. They need to focus on selling houses to investors. Investors buy houses all the time, regardless of market, regardless of rates, because we don't care. Now, guys, if I could take this house and get $3,500 a month for it, which I can't, so I wouldn't, but if I could take over the underlying loan at $1,852 and rent this house out for $3,500 a month, I'd be making $1,700. I don't care that the loan's upside down. I'm getting a rate at 4 when right now I can only get a rate at 7.5. So if I could get $3,500 a month, I would do that deal all day long, but I can't, so we won't. So we focus first on investors. They don't care about rates. Investors could care less about rates. So when you guys are on the phone, Cocoa Capital, talking with borrowers about rates, and they're going, oh my goodness, 9%, that's really high. Do you realize that right now it costs a first-time home buyer 7.5% to buy a new home? 9 is like really good. Or somebody will complain about, oh my goodness, you're going to charge me 13% interest to borrow money from Cocoa Capital. Forget 13, what's your yield? Even if we're paying 13 and you're making a 20% cash on cash return, what do you care? Okay, this is what's called opportunity cost. The cost of the opportunity is 13%, but you're going to make $30,000 in profit. Why do you care about rates? Investors should never care about rates if they're going to make a profit on the deal, okay? The second area we focus on is first-time home buyers. Why? Because in a recessionary downturn, the federal government always creates loan products and programs for first-time home buyers to get down payment assistance, to buy down rates. So instead of 7.5, we can buy down a buyer's rate by 3 points so they can still get a rate of 4.5 even though rates are at 7.5. The government will always create loan products for first-time home buyers, which means all of our investors, when you guys are on the phone with our clients and they're going after jumbo properties or they're trying to do new build or new construction, discourage them from doing that. The way that you play it safe in a recessionary downturn in the market cycle that we are in is you focus on lower priced homes. So the FHA cap that we talk about in Cocoa Capital all the time, in Spokane County, it's 420. Guys, we're not looking at any houses where our retail sales price is going to exceed like 300,000 because that's getting too high. And a $300,000 house at 8% interest takes that property out of the realm of affordability. So the lower price the property is, the greater chance you have of selling it and getting out of it and making a profit. So encourage our clients not to slow down. Do not slow down. I mean, now you should be buying more than you ever have. There are going to be more deals in the next 12 months than we have seen in the last 36 months. Now is the time as an investor to be buying. But if your intention is to flip, you need to be buying first-time homebuyer inventory only. No jumbos. Jumbo is any loan that exceeds the FHA cap. That's considered jumbo. Don't touch them. And we don't want to be involved in new construction because we don't know where rates are going to be when we finish the project. They could be at 9 or 10. So even if you can borrow new construction financing today at 6, if it takes you 18 months to build the project, you're 10 by the time you get done. So you never want to build now. So discourage all of our clients from any of those strategies. The third way we make money in this market is what's called a short sale. Now, these are going to be coming out in abundance because that scenario I just gave you with the property on Wellesley, that is going to be a very, very common scenario. People are going to owe more than their property is actually worth. So when they go to sell it, they can't unless they write a big fat check to the lender to get out from under that loan, which most people don't have the ability to do. They are underwater in the deal, which means we need a short sale.